Hello everyone, welcome to Cheongfuli Weekly Report. We bring you the latest price and market analysis of China's steel market every week. Spot prices trended down this week. Up to now, the spot price of rebar has fallen by 30 yuan per ton week on week, while hot-rolled coil spot prices dropped by 20 yuan per ton week on week. Market trading sentiment weakened compared with last week, and overall market activity continued to decline. From a macro perspective, the US and Iran have signed a memorandum of understanding. The agreement stipulates that both sides shall permanently cease all military operations on all fronts, achieve a comprehensive ceasefire, and lift the shipping blockade of the Strait of Hormuz. Geopolitical risks have eased substantially, triggering a sharp correction in international crude oil prices. The Federal Reserve's interest rate meeting concluded this month with a decision to keep benchmark interest rates unchanged, yet the dot plot indicated heightened market expectations of rate hikes. In China, a coal mine in Qinyuan County, Shaanxi Province, was fully shut down for self-inspection following a gas explosion. The first coal mine in the county has now resumed production, with the resumption progress faster than anticipated. On the supply side, total steel output edged up. The total supply of 5 major steel products stood at 8.6802 million tons this week, rising by 109,700 tons week on week. Meanwhile, molten iron production posted a mild increase. Given current profit margins at steel mills, molten iron output will remain at a high level in the short run. By product, rebar output rose slightly to 2.1873 million tons, a week-on-week increase of 41,400 tons. Hot-rolled coil output also ticked up to 3.0266 million tons, growing by 31,400 tons week-on-week. Demand saw a notable uptick, with apparent steel consumption hitting 8.712 million tons this week, up 261,800 tons week on week. Broken down by product, apparent consumption of rebar reached 2.208 million tons, surging 134,800 tons week on week. Apparent consumption of hot-rolled coil stood at 3.0183 million tons, increasing by 81,800 tons week on week. Holiday restocking boosted purchasing volumes this week, but market participants remain pessimistic about the outlook, resulting in limited speculative demand. In terms of inventories, total stocks of the 5 major steel products declined moderately this week, totaling 15.5702 million tons, a week-on-week drop of 31,800 tons. By product category, rebar inventories stood at 6.5889 million tons, falling by 20,700 tons week-on-week. Hot-rolled coil inventories reached 4.2128 million tons, rising by 8,300 tons week-on-week. Overall, China's domestic steel market held steady this week with a slight rise in steel output. Driven by holiday restocking activity, demand improved week-on-week and inventories shifted from accumulation to destocking, leaving the industrial fundamentals flat week-on-week. The market has fully priced in eased tensions in the Middle East, weakening crude oil's cost support for bulk commodities. Steel mills still maintain willingness to ramp up and resume production. However, downstream sectors are gradually entering the traditional off-season, leaving limited room for further growth in end-user construction and procurement demand. Potential pressure on the domestic supply-demand structure is building up, and the steel market will stay in a weak supply-demand balance in the near term. Market sentiment for future prices remains bearish, and steel prices are expected to fluctuate weekly in the short run. Going forward, we will closely track changes in steel supply and demand as well as the pace of coal mine production resumptions. Based on the above analysis, here is our operational suggestion. Purchase steel according to actual demand and properly control inventory risks. Institutional views hold that the traditional peak demand season for steel is now drawing to a close. With increasing rainfall in southern China, demand will keep softening and supply-demand pressures will mount gradually. Nevertheless, raw material prices will continue to get support from safety inspections at domestic coal mines in the near term, and steel prices are expected to fluctuate on a weak footing. In summary, steel prices will generally fluctuate at a weak level. We need to closely monitor changes in steel inventories and domestic coking coal supply. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.